Hello, everybody. So today I want to talk about StoneCo, STNE, former favorite of the channel turned boring. That's kind of a title of my video. So, revenue growth. This Q3 revenue growth has stalled. It keeps stalling. The revenue growth is at 7%. Maybe 8%, depending on where you look at, 7 to 8%, nowhere near my minimum of 30%, and even if I were to say I want a stock that keeps up with inflation, that's nowhere near my monetary inflation threshold of 15%. On the other hand, the EBIT and net income, EPS, is all growing very nicely, between 35 and 40%, so all growing super nicely. Wall Street should love it. We are making a profit. Wall Street should love it. We are into the cash piling business. Oh, wait, the stock is roughly flat. Wall Street doesn't love it. Wall Street doesn't care. I have no idea what this stock is catering to Wall Street. I believe they should focus on revenue growth. Stop with this. Stop wanting to pay taxes so eagerly, so in a hurry to pay taxes, StoneCo. I don't understand. Anyways, when I look at perhaps an explanation for the stock's flatness, I mean, it's been down a little bit, but it's not catastrophe. It's not worth making the headlines. It's just boring. I don't even know what to say. Reais to USD. So this is the rate. You can see it was at 0.2 and then it dropped to 0.17. Well, that chart of the exchange rate between the Brazilian real and the USD kind of looks like the chart between the exchange rate between the stock price and the USD. That kind of looks like the same chart. This is a 1 year chart. This is a 1 year chart too. Well, year to date, but roughly the same. So I'm like, what's going on? It's following the reais and the dollars. When I look at their payment volume, that's a little better than the revenue growth. It's growing at 21% the number of clients. Transaction volume is growing by 20%. So it's a little better. The take rate, it increased, right? It went from a whopping 2.54 to a 2.58 at a record level. It's been slowly increasing. Don't get me wrong, boring is not bad. Boring here is going in the right direction. It's all going in the right direction. But you know, it's nothing to be super excited about. When I compare this to some of my other stocks, I mean, when I started covering this stock, it was growing much faster. This one is just taking like a sleepy break or something. And by the way, they just gave up on software. What are these numbers? They're essentially giving up on software. This is confusing the market. I believe they should probably sell the links part of the business. They should sell the software business. This is just losing to inflation. So I don't understand why they gave up on the software. The software is not doing well. It's not growing. If you're not growing your software business, then you are a declining business. You gotta grow faster than inflation. Now, again, like I said, they are catering to Wall Street. Look, they're bragging, right? Earnings per share, they love to pay tax. Earnings per share is up 42%, almost 43% up. So they're catering to Wall Street. This reads all, I live Wall Street, they're more efficient. Like I said, adjusted EBIT is up 40%. Net income is up 34% is what I meant here. And what I read is here, I love Wall Street. And then I look at their client deposits. So they must have a lot of incentives going on to try to get these client deposits going. And I read at the credit portfolio, and what I read is I want to be a bank. I want to be a bank. That's what I read when I see how much they are starting to lend. Keep in mind, that's not a lot. That's like $180 million here. So it's compared with that company, they're not lending too much. But nonetheless, it seems like they're taking the direction of trying to be like a bank and trying to cater to Wall Street. When I look at the retail deposits, which are their small businesses that are banking with them, it's up. For banking active clients, it's up. They're taking the bank over direction. As a reminder, I haven't said yet, but Costco, if you're new to the channel, Costco is kind of a square of Brazil. What they do is they do payments in Brazil. They have this payment terminal for small business, about 3 million businesses that handle the payment with StoneCo, and it seems increasingly want to do their banking with StoneCo. That is the business. Now, loans. Let's look at the loans. Well, they've been growing back the loans portfolio. If you know anything about the stock, they already made a mistake back in 2020, 2021 with their loan portfolio. They had an issue with a collateral registry, and they had major losses on the loan portfolio. When I look at the non-performing loans that are 90 days or older, it's going up from 2.6 to 3.7. Wall Street's not going to like that. I don't like that. 15 to 19 days is going down. Well, that's good, but what you're really worried about is the 90 days plus non-performing loans. Loans that are not getting paid back. Well, that's an increase over 1 point here, right? That's a major increase, 30-ish% increase, right? Maybe they should keep the consistency and put 30% everywhere. This is a 30% increase in non-performing loans. That's not very good. But anyways, still a very small part of the business. I think the stock will be largely flat after this report, after this earning report. Again, they have a cash pile. They've barely spent it. I mean, what is this? They've barely spent it. So we have a $4 billion enterprise value firm who essentially just stares at $1 billion for 5 quarters. It's kind of... it's kind of like, so, okay, and they did a little bit of a buyback. Now, you should see that this was ended June 30th, so you should see that blue bar. There should be a slightly lower blue bar right here. So they are doing some buyback. So I guess the number of shares outstanding is decreasing. Once again, this is a company that has done a 180, that is fully catering to Wall Street, right? While I would love to see StoneCo talk about growth, talking about other verticals, can they sell to bigger companies, to bigger stores? Can they move out of Brazil, expand into Latin America, become the square of Latin America instead of being just the square of Brazil? Can they do all of this growth? No. This is a company that has decided to not do growth. This is a company that has decided to be in the cash piling business. Buy Bitcoin? Maybe you should buy Bitcoin. Maybe that's what you should do, but no, that's not what they want to do, because a lot of that net cash position, what do they want to do with it? They want to lend it, which is not something that I really like and that I really want to see them do. And I will conclude, yeah, they're on track to deliver their guidance. They're likely going to beat their guidance, and so we're gonna have transaction volume up 18%, client deposits up 14%. Again, nowhere near where I want them to be as far as 30% revenue growth, which is what this business used to be growing at when I was buying it. Efficiency is doing well, and they're monetizing the business. The take rate's going up. This is good. This is alleviating some of the fears about PIX. PIX is kind of the payment system introduced by the Brazilian central bank. They introduced a thing called PIX. It's not really a CBDC, but I guess I could call it a CBDC-like system where it's free to do peer-to-peer payments with PIX. It was a big fear for StoneCo about a year back that everybody would move to PIX and stop paying at stores with their credit cards, except that wasn't true. They keep paying at stores with their credit cards, and that's, as the CEO of StoneCo mentioned many times, is because apparently Brazilians love credit cards, and they always want to pay for credit cards because they want to get the rewards. So the take rate is proving that PIX is not taking business away. So that was an overhang on the business that is not there. Now, the stock is cheap. The stock is slow growth. Analysts are predicting, as far as revenue growth, they're predicting 13% revenue growth. So, it's yawn-inducing. It's not very high. But the reason why this stock is not on my sell list, the reason why this stock is on my I guess I'll keep it stock, is because the EBITDA margin is 50%. This is flat, so this is a money minting machine still to this day. We are trading at 1.69 times revenue, right? 3.81 times adjusted EBITDA. Adjusted EBITDA is a proxy for cash flow. They and productivity for them doesn't matter too much because it's a lower income type of country, so they don't pay as much. Anyways, the point here is is, it's a cash machine. This company is a cash machine. Look, I compare to similar companies, like Shift4, say in the US, or Square. You can see Square is trading at a 55 times EBITDA, right? Shift4 is trading at a 25 times EBITDA. Even PayPal is 4 times more expensive than StoneCo. So I guess I'll keep it because they're a pretty crazy cash machine. And so the question is, do you want to own a cash machine? I'll keep it. Like I said, I'm not too excited about it. I wish they were growing the top line instead of focusing on piling cash and doing barely a dent in the cash pile by doing a buyback. I'd rather them focus on growing. This is a stock that would fairly fit. It would greatly fit into a true value investor. Like if you were a true value investor, not interested in growth, this stock would be very, very, very eye-watering. Now, in my case, I'm down roughly 20% on it, so it's not like there's that much. I guess tax harvesting is still tax harvesting, but come on, that's not a big tax harvest anyways, 20%. So yeah, I'll keep it, and I'll be waiting for growth to resume, just because the lack of growth, in my view, is being more than made up for by how cheap the stock is. Even if you look at traditional metrics like the P ratio, I think the P ratio is like an 8 or something. So I'll keep it. It's just boring. So hence the title of the video: a boring cash printer. There you go. I'll just keep it. I'll keep an eye on the performing loans, the non-performing loans, making sure that they don't do too much. But it also seems like, frankly, they don't have a lot of conviction in the lending, because it's only 180 million that they lent. They're going so slowly into the lending business. So anyways, this is my take on it. This is not investment advice, just entertainment, no financial advice. Please please subscribe. Thanks for watching. Follow me on Patreon. Follow me on X. Have a wonderful day.